I started buying Bitcoin in 2013. I bought Bitcoin at $180, and it has never felt cheaper than right now. Not enough people think about it in terms of market cap. They think about it in terms of the price per Bitcoin. I've been buying Bitcoin all the way up, and I still buy it today. It's my default savings technology. So anytime that I make any money from doing anything, startup investment, consulting, building salary, whatever, goes into Bitcoin by default. We've got gyms, accounting firms, coffee shops, restaurants, software startups on the platform who are putting a percentage of their revenues into Bitcoin. I think it's at least a $100 trillion asset, potentially, probably at least a $200 trillion asset. It's the Nassim Taleb quote, "Don't tell me what you believe, show me what's in your portfolio."
Before we get into all the Bitcoin topics, maybe give the viewers and the listeners some background of who you are and especially why you're excited about Bitcoin.
Yeah, totally. So I'm Stephen Cole. I am co-founder and CEO of Castle. And Castle is a Bitcoin company. We're the easiest way for businesses in the US to buy Bitcoin, establish a Bitcoin treasury, and manage Bitcoin treasuries. Prior to founding Castle and I suppose prior to Bitcoin, I was really involved in web technology. I spent about 10 years in Silicon Valley and went there right after I finished school, studied computer science, and I spent a decade kind of immersed in the Silicon Valley web technology scene. So the first 4 years of my career, I was at eBay, and that was back when eBay and PayPal were one big company together. And so kind of learn the ins and outs of big enterprises there. And then I really got enchanted with startups and that notion of a small group of people who are on a mission on something they think is really important, with just no bureaucracy or nonsense getting in the way. So I fell in love with startups, had a couple journeys in the cloud computing and AI space as an early employee of startups around the Valley. And then that was about 2017, and the AI company I was working for at the time, called Nirvana Systems, was acquired by Intel. I stayed at Intel for a little while. I tried to get people within Intel excited about Bitcoin, and I failed miserably to do that. And I decided to leave and just focus all of my energy on investing into early stage companies. So pivoted a little bit from engineering to kind of venture capital, angel investing, and an early stage VC. And a big emphasis of the investing that I did and still continue to do to some extent was on the Bitcoin sector.
Interesting. And you have a really unique background. How do you think your unique background, how has this shaped your way of understanding how you look at Bitcoin today?
Man, what comes to mind when you ask that question is the block size wars in Bitcoin. And that was a pivotal moment in my Bitcoin journey because I felt like during my tenure managing engineering teams and kind of architecting big distributed systems, I gained this big respect for simplicity and for scalability, and I just saw numerous times where there would be these things that seemed like good ideas on the surface, and then when you actually dug in, there was so much nuance and there were so many edge cases to it. And I interfaced with a variety of, different folks in my career, different personalities and communication styles. And one persona that I encountered over and over was kind of the cocky know-it-all engineer who, will loudly proclaim, this is absolutely what we should do. Anyone who says otherwise is wrong, and kind of my way or the highway. And then there were the more, maybe quiet, thoughtful folks who are not as loud, not as comfortable even trying to be loud, but they really understand all of these edge cases. They just spend a lot of time thinking about the ways in which things can go wrong that are not obvious unless you're really deep inside the system all the time. And so in Bitcoin's history, for listeners who aren't as familiar with the block size wars, there was this formative period in Bitcoin that kind of spanned like 2013 or 14 until 2017. And it stemmed from a disagreement about how Bitcoin should scale. So there was one group that felt like we need to make sure that on-chain payments in Bitcoin are always free or virtually free, And so in order to ensure that transaction fees don't rise, we should raise this parameter called the block size. We should make the blocks in Bitcoin's blockchain larger. And on the surface, that might seem like a fine idea at first. But then the other side of that camp kind of said, no, maybe that's not the right thing. Maybe we should take this more measured long-term approach to scaling where we don't just keep kicking the can down the road by changing this block size, but we scale up in layers and we do clever stuff like this thing called the Lightning Network that didn't exist back then. And I think seeing the debate and seeing those two sides where you kind of had the core developers who were largely on the side of don't change the block size, instead scale in layers and preserve the immutability of Bitcoin's core kind of consensus rules, versus all of these people, these other developers. Like there was a guy named Mike Hearn who left Google to contribute code to Bitcoin. He was kind of one of those very loud, arrogant, my way or the highway types of folks. And seeing that back and forth actually helped open my eyes to what makes Bitcoin special. Because initially I thought, yeah, like cheap payments seem fine, so why don't we just raise the block size? And it led me to try to understand the argument from the small block side and from some of the core developers like Peter Woola and Greg Maxwell and Adam Back. And in doing so, it opened my eyes to, wow, actually, this whole Bitcoin thing, what sets it apart from the other coins, what makes it special is that some of these rules can't be changed. Like the supply cap, for example, 21 million coins. That immutability and that resistance to change that we get through decentralization, what if that's actually what makes Bitcoin unique and special? And that is to be preserved and fought for. And I hadn't been thinking about it in that way at all before that. And once I saw it, I couldn't unsee it. And my confidence in Bitcoin just 10x'd from there.
That's crazy. Because when you think about the moment in it, and I unfortunately wasn't there, and probably also a lot of the viewers were not there at the block size. Well, it seems like crazy long ago. It's now like it's 8 years gone. Like that seems that's ages in Bitcoin time. It's like 80 years in Bitcoin time, and so it's a while ago. But it's so interesting how this miracle of Bitcoin came to be, and how at every step the way it grew in the best possible way, and not too fast, not too slow, where it still preserved the decentralization, the security of it, but still also attracted a lot of people to talk about it and work on it. And even people that maybe didn't have the best intentions, or maybe just had a different way for Bitcoin. And it's still preserved through this time without a head, without a marketing team, without a CTO or anything of that. When we talk about Silicon Valley and when we talk about scaling companies, that's the ultimate goal of every founder, doing 2-3 years of work, starting something, and this becoming so much bigger than you've ever imagined it, and it just rolls on its own, and it's actually better working because you're not involved. It's kind of magical when you take us back to this historical moment.
Yeah, it really is very special and fun to reflect on. And there's a great book entitled The Block Size War by, I'm blanking on his name, Jonathan, someone who I believe now is at BitMEX Research, and highly recommend that book to anyone who's interested in learning more about that period of time.
I think you worked at PayPal also, right?
The paper, I wrote a lot of tweets. I think I wrote a Medium post about the block size wars. Nothing that particularly blew up or is held up as canon in Bitcoin history, but I was trying to be fairly active in evangelism during that time. Partly because, like you said, it was driven home for me that wow, Bitcoin doesn't have a marketing department. And unlike these other coins that, are getting spun up and doing ICOs, and they have pre-mines and all kinds of allocations they can carve out just for marketing to pay people big bucks to say nice things about their projects, Bitcoin doesn't have any of that. And so if you are one of the few people who understands and appreciates Bitcoin and believes it's important, then there is no one else but you and other believers like that who are really around to and incentivized to tell the world about it.
Interesting. I love to hear more. Really interesting. And just to have some background on that, you're doing also Castle, which is focused on Bitcoin companies and their strategies. What is that all about?
That's right. Yeah. Happy to dive into more of what we're up to at Castle. So I'm the co-founder of Castle. My co-founder, and he's now the CTO, his name is Joao Almeida. He was previously the co-founder and CTO of OpenNode, the Lightning payments company. And he and I have known each other for about 6 years now. We've been good friends for a while, and I was rooting for him and the whole OpenNode crew in their journey back in 2018 when they launched. And he actually started the company that is now Castle, and then we reconnected around it, and we decided to partner up shortly after. And Castle is a platform that's focused on making it as easy as possible for businesses in the US to buy and hold Bitcoin, to use it as a savings technology, as a treasury asset on their balance sheet. And we're not really serving huge corporations. We're not going after like MicroStrategy and Wall Street and megacorps like that. We're really focused on purpose building something for all of the other businesses in between, like small and medium businesses, cash flowing businesses that range from your local coffee shop or your barber shop all the way to, mid-market corporations doing hundreds of millions in annual revenue. So building the suite of tools and integrations that companies like that need and can benefit from when it comes to being successful in holding Bitcoin and using it to amplify their business.
That's super interesting. And you also had this history, and I looked at it yesterday, so I don't remember exactly. I looked at your podcast yesterday with Robert Breedlove, where he talked about the WikiLeaks story with PayPal, which I found was interesting. How did you come to that?
Yeah. So I'll preface all of it by saying I've always been really attracted to just the internet and even to cybersecurity since a young age. So when I was like between the ages of 12 and 16, I was always on the computer. I was very blessed to be one of the first houses in our small town in Missouri where I grew up, where high bandwidth internet became available, like DSL. And so I remember kind of convincing my parents that we should have this and how amazing I thought it was. And so I was constantly immersed in online communities. I think by the age of 15, I had like thousands of posts on online hacker forums and cybersecurity forums, because I was just always really intrigued with that world. And so I wasn't like on the cypherpunks mailing list or thinking about cryptography or anything of that nature. But, a few years after Bitcoin was created, one high profile incident revolved around WikiLeaks. So Julian Assange's journalist organization that's kind of oriented around free speech, and WikiLeaks had been revealing a lot of bad stuff that powerful people had been doing and that powerful governments had been doing. And back when, I think this was 2010 when this went down, I was 2 years into my gig at eBay, and at the time eBay owned PayPal. And I was like in the part of the campus where both of those companies had a presence. There were like some buildings that were PayPal only and some that were eBay only. And I was in one of the few that was both PayPal and eBay. And so the teams interfaced a lot and strategized together a lot. And I remember there was all of this drama and back and forth when the leadership at PayPal decided to ban WikiLeaks, to censor payments that were being donated to WikiLeaks. And at the time, that was really their lifeblood. They were relying on those funds for operations. And so they started instead accepting payment in Bitcoin. And, or maybe they already were taking payment in Bitcoin, but then like after all the PayPal stuff went down, then more donation volume started to flow towards the Bitcoin side. I can't remember that detail, but it ended up being a big, happening within Bitcoin, because at the time Bitcoin was still very much in its infancy. It got a lot of eyes on the project. And there are posts even from Satoshi Nakamoto, who was still around at the time, that were kind of like, is this actually the type of attention that we want right now when we're this small of a project? And are we going to be able to survive this? And Satoshi had a forum post that's one of his that gets referenced quite a bit, of along the lines of, don't kick the hornet's nest. Like, it's too early to be kicking the hornet's nest. We don't necessarily want the CIA and the intelligence community and all of these powerful entities to really have Bitcoin in their crosshairs quite yet. The project needs to mature a little bit. But I was in some of those rooms at PayPal where those decisions were made to censor those payments. And then literally so afterwards, the online organization called Anonymous, they responded by doing a distributed denial of service attack against PayPal's infrastructure. So they were basically just trying to take down the PayPal website 24/7 as, backlash for that censorship. And so, I, like a lot of my buddies, worked on the firewall and cybersecurity teams at PayPal. And so it was just an insane few weeks where they're up like 24/7 trying to make sure that the firewalls are blocking this traffic and that legitimate users can still use PayPal. And so, yeah, being kind of in the trenches of the technical operations there, I didn't fully appreciate, like, I hadn't really heard of Bitcoin at the time, but it drove home the threat of centralized kind of finance to me, traditional finance, where those few powerful people in a room, either of their own volition or because a government calls them and says, you have to do this, they can cut off the funding of an organization that is saying we're doing things that they don't like. And at some point it can become kind of an informal extension of the government. And so that was unsettling to me. And it was the first time that I remember in my career thinking, wait a minute, like, are we the good guys? Is that like, yeah, I like this fintech stuff. It's cool. Online payments are great. We're like moving the world forward with financial IT, but there are some aspects of this that we need to think hard about. And so that really stuck with me.
It's and I think a lot about that, because people ask me, and I literally got a comment today like, oh, like, why are you saying Bitcoin makes the world better? That sounds like a cult. And I get that, because in the first thing is like, oh yeah, it's a nice asset. And oh yeah, it stores value. Oh yeah, maybe it's a medium of exchange. But I truly believe that if we don't have financial freedom, the other freedoms are very hard to achieve. I don't think that's impossible, but I think a true freedom, like freedom of speech, other freedoms that we have, that we can move around and do things, all of that are kind of depending if you own your own finances. And if everything runs through centralized authorities and centralized parties, if they can just block you or censor you, if they decide to, I don't know if we're actually free, even if all other freedoms seem to be fine, because then they can shut just the finance up. So like, I like that example because it shows that financial freedom is very, very real, because without finances, you don't get resources. Without resources, you can't survive. Like, you need resources to survive.
Well said. I agree completely, Robin. I think a great framework for thinking about Bitcoin and thinking about monetary technology and money in general is as a freedom tool. And if we are working hard with our scarce time in this world and our scarce hours in the day, then, we create some value, and you have to choose where to store and protect that value. And maybe you choose dollars, maybe you choose real estate, maybe you choose bonds or Bitcoin or gold or silver. You have a bunch of decisions to make there. But if someone can then take whatever you've chosen to protect your value. And if they can take it from you, either in explicit ways, like literally just grab it and they have it and you no longer do, or more insidious, implicit ways, such as printing more of those things for themselves to dilute the purchasing power of the ones that you still hold, then really they can take your life, because they can take the value that you used your time in your life to earn from you. And so it's a form of enslavement, but it's just less obvious. A fun little inversion exercise that I encourage is when it comes to, fiat currency and how some of the traditional finance and banking system has evolved, is put the lens on of someone who is, an evil authoritarian dictator or small group of people that wants to rule the world and control everyone and enslave everyone. And if you put that lens on, then you could say that some of the progression of money has actually been breakthrough innovations in theft technology. Like the US dollar today and fiat currency that is no longer backed by anything, no longer backed by gold since 1971 is a breakthrough innovation in theft technology, because suddenly they can steal from you in ways that you don't see and you don't understand. The ways they used to have to steal from you when their theft technology was less sophisticated was maybe clipping the edges off of coins and things like that to steal value from the people who were attempting to save. So currency debasement. But back then, those forms of currency were not as well suited for theft technology by those who control the money. And so we've gotten to this point where now not only is the dollar not backed by anything, but most dollars are digital. And so it is literally just keystrokes in computers in centralized databases that allow people to steal the value of hard workers thousands of miles away from them on the other side of the globe, potentially even outside of the US. There's a lot of the world that's trying to protect their value in the US dollar. And so the US dollar is an incredible innovation in theft technology.
I love that. Incredible innovation in theft technology. It's I never heard the words theft technology. That's a new one for me.
It's a fun one to play with.
But in general, the US dollar, I get but if we think about that decision, what PayPal and eBay did, and just as and putting myself as the CEO in that decision, I'm like, okay, if we are censoring transactions, not only are we making kind of a political stance here, but also with those transactions, I don't know how the revenue model of PayPal and eBay worked back then, but I guess with more transactions they made more money. So they're basically banning themselves from making more money. So there has to be some major incentive to do that. Were they scared of government, or was the government already involved in there? I don't know how much you can go in detail.
I think it was a little bit of both. And I certainly, I wasn't, in any rooms where I directly saw some, a black suited men in black looking figure come in and say, hey, PayPal, we, the government, hereby command you to do this. But I think that companies like PayPal were and still today are deeply entangled with the government and function as an extension of the government. And so a lot of what PayPal needed to do in their early days just to survive and have a legitimate business around fraud and risk management, certainly that's important. You don't want fraudulent activity on your platform, both because it means you might not get paid and because it's, it's just someone in your ecosystem is going to get shortchanged. And so you don't want those experiences to be facilitated by your platform. So all kinds of legitimate reasons to have protections and rules and acceptable use policies, terms of service, and so forth. But I think it is a function of size. Once you get so large, there are inevitably these pressures that get applied from regulators and from the government. to take actions that the company might not otherwise would because the government wants them to be taken. And, I think Google has kind of walked a similar path. Back in 2004, Google was this don't be evil, like champion of the people, amazing new technology. And Microsoft was kind of demonized, right? Microsoft was like the evil empire, and Google was this pure-hearted, angelic savior that was coming to like democratize tech. And then over time, Google got enormous, and now it's like if you're uploading something to Gmail or Google Docs, you're basically just uploading it to the CIA and the NSA servers. Not literally, but they're so large that it is just inevitable that they get entangled in that and they get pressured. And so I think architecting systems and companies in these ways that are decentralized to be immune to some of those pressure points, or that rely on protocols like Bitcoin or like Nostr that make the platform underneath immune to some of those pressure points, is incredibly important.
Is there any chance those actually get decentralized? Like I think about Nostr right now, and I see development, there is excitement there, but it's very little. Like if you talk to Bitcoiners, most of them are not even on there. And it's the growth there and the nodes there. You can see most of it. It's very slow. Obviously, it's also in the very early phases, and those network effects of Twitter, of Facebook, of Google, of YouTube, and all those platforms are really tremendous. Like people are really, even though they hate on those platforms, they still watch it. there can be someone saying bad things all day long on Twitter about Twitter. I'm like, yeah, you're using it 8 hours a day. You're feeding the machine. If you don't like Twitter, go off of the machine. So those network effects are fascinating, strong, and there is some kind of friction for me where why would that be decentralized? Like they have to be so much better that people actually go through the hurdle of having their own access and like having public-private key. And what if they lose their private key to Nostr? Then they have to start over with their accounts and all those things. It's even in Bitcoin. Most Bitcoiners are not self-custodying. I'm proponent of self-custody every single episode. I asked my viewership who's self-custodying, about 50%. I'm like, wow. It's like I'm doing it every single episode. I have all my partners are only connected to self-custody, and I'm like, still 50% don't do it. So it's like I have a lot of questions if decentralized technology outside of Bitcoin and money will actually work. I don't know, it's just a lot of question in my mind if there's actually, I would love to see a Nostr at Twitter that's just like can't be taken away. But the convenience of those platforms is huge.
Yeah, great points all around. Those platforms are very much in their infancy. I'm not very active on Nostr. I was really early to create an account there, but it's been hard for me to get momentum on it day to day. It's a very small group of people who are using it. And if you want to get the latest and greatest on breaking news and you want a diverse kind of feed that spans not just Bitcoin and self-sovereignty, but maybe like business and startups or like whatever you're into, then X or Twitter is still the place. I think interestingly, one good thing for the world, but it has probably set back adoption of technology like Nostr, is Elon buying X and eliminating a lot of the censorship that it was subjected to prior to that. Because, when people can feel or they explicitly somehow see that they're being censored, then it's a strong, just visceral reaction to want to go and find an alternative and get fed up with it and seek something new. But when Elon came in and, kind of revealed that, yeah, all the conspiracy theories that people had about Twitter were 100% true. There was top-down censorship being performed, and the Democratic Party would like text and email them to take stuff down, and they would just do it. And they would shadow ban certain accounts that were messaging things that the administration in power at the time didn't like, all of that. So there was a lot of nonsense. And I think Elon going in and ripping that out, firing 80% of the people and giving it essentially a reboot, gave people this sense of, okay, well, maybe there's a clean slate. Maybe life here is going to be okay. And in my view, it's been much better since. And so I think it's like the more that we have these centralized systems where they can build a really beautiful user experience and low latency experience, but it's not architecturally resistant to censorship. It just kind of resists censorship by virtue of having a leader in place and an organization that chooses not to censor at this time. I think that actually provides less incentive for people to seek out these self-sovereign alternatives. So I love that Nostr exists and the Nostr development is happening and that Jack Dorsey is going as hard as he is at it. I think it's important because you don't want to wait. If Twitter fell into bad hands tomorrow, then you don't want to have to develop all of that on day one when you no longer have this other alternative. You want to build things before you need them, and so I applaud everyone who's building on systems like that and using systems like that. But I do think it's nice that these more systems with greater network effects that are already in place and more of the population already on them are able to communicate more freely already. I do think that's a positive development.
And it's interesting because if you look at what happened, this Nostr is an exit valve or an escape hatch or an off-ramp or whatever you want to call it to Twitter. If you don't find Twitter sovereign enough or freedom focused enough, you can go to Nostr, and you're 100% right. I'm on Twitter since, I think my account is since 2016 or even earlier there. So I've been a passive user there for a very, very long time and an active user since 2023. A little bit earlier than that, actually 2022, I think I really started. So I have seen the Twitter development with Elon Musk a lot, and I love Twitter now so much more than just 2-3 years ago, which is kind of fascinating because they have less staff there. It's a lot of people really didn't do a lot of work there and were highly paid. It's interesting when there's a CEO coming in that actually cares about about what people actually do. But then also we had Mark Zuckerberg coming out and saying, "Hey, we are now the cool platform again. We are now the freedom-focused platform, and I'm very sorry that we've built that thing where I was the CEO. I'm now returning it." Which was kind of fun to look at that kind of, I don't know, backdrop, the backflip that he did there, especially then with the Joe Rogan episode. I watched that one. That was very funny for me to watch, where he was kind of trying to get in the cool group again. Hey, I'm for freedom of speech. I'm one of you. Please stay on Facebook.
Yeah. That dynamic was pretty funny to observe. I'm glad that Zuck and Meta seem now to have more of a pro-freedom stance. I definitely don't have the same level of respect for him, and his timing seemed like a convenient follow-on. Once he saw that the winds were changing, then he was quick to change his position, but he definitely was not out there putting his reputation or capital or credibility on the line, taking this freedom stance when it was unpopular. He kind of waited to see it de-risked by others who took what in my view would be braver stances. So, I love his kind of cool personal arc he's on where he's doing MMA and flying American flags while he surfs. Awesome. Amp it up. But I hope he stays pro-freedom, and I would like to see him go even harder at things. I would like to see Meta get some Bitcoin on the balance sheet. They've got a lot of cash on hand, and I think I even heard Zuck has some pet named Satoshi. I think he has like a goat or a llama or something that's named Satoshi.
I think it's actually called, is it not called Bitcoin even?
Or maybe Bitcoin. Yeah,
Yeah,
I'd have to check to refresh my memory. But there are all these weird indicators that this stuff's kind of on his radar. I don't know if subconsciously he doesn't want to do public big things with Bitcoin, because on some level it would admit to him that the Winklevoss twins beat him to this, more than 10 years ago. And I assume he still hates them. I don't know. It's fun to try to like figure out what's going on in his mind, but Zuck, you still have the opportunity to take a first mover brave stance by being, the first Mag 7 to get Bitcoin on the balance sheet in a big way. So let's go, let's do it.
Yeah, here you see it. He posted that picture of his goats, and he said, "My goats, Max and Bitcoin."
Max and Bitcoin. There you go. Max Bitcoin. Let's make that your strategy.
Maybe he's like a secret Bitcoin maxi since like years and years.
That would be an incredible unveil one day, and a potential 10xer of my my respect for the guy.
Yeah, and it's actually something like he seems to, as you said, like he waits for public confirmation. And to some degree, I'm like, okay, he has a big company, a lot of responsibilities and shareholders and all those things. But man, you have to be brave. Like,
yeah.
And now the wind is already shifting. There's BlackRock in the game. Like it's not that Bitcoin is no longer this small little thing. There's big players in the game. And I guess Mark Zuckerberg could be the first really big one that moves in a big way into Bitcoin. Yes, Tesla is also a huge company who has, I think, 10,000 Bitcoin on the balance sheet. 10,000 Bitcoin is a lot of Bitcoin, but not for Tesla.
Yeah.
So if Mark Zuckerberg comes in and says like, oh yeah, we acquired, 200,000 Bitcoin, and we will continue to acquire hundreds of thousands of Bitcoin till this thing, and there's a plan and all those things, and he has a picture with Microseed and all those things that he might be able to do with those things, that would be a huge shift. And I think this is also, if he really wants to get in this sovereign branding and this kind of image, I think that would be probably a big move where he can put, because talking on Joe Rogan about, oh yeah, I do MMA and I like freedom of speech, and then just changing a little bit of things in the Facebook algorithm, that's not that big. But if he puts on like 20% of the balance sheet of Facebook all of a sudden to Bitcoin, that's where he actually puts financial real energy towards the freedom technology. Like that would be real. That's not just like talking. That's actual action.
100%. It's the Nassim Taleb quote, "Don't tell me what you believe, show me what's in your portfolio." So if Mark Zuckerberg wants to demonstrate powerfully to the world that he's really about freedom, then he and or his company will stack Bitcoin. That is one of the most powerful pro-freedom actions that he could possibly take.
How do you actually look at, sorry, you want to say something?
I will say, maybe it's a bit of a tangent, but one silver lining, though, of large companies like that, like the Mag 7 and FANG and sort of S&P, like Fortune 100, S&P 500, one silver lining of not many of them having Bitcoin yet, or not any in some of those cases, is that I do like that it gives the other businesses the opportunity to front run them. For most of history, Wall Street insiders and those closest to the money spigot, they benefit from big innovations first, kind of at the expense of everyone else, because they just have access and they're insiders. And one thing that is special about Bitcoin is that retail has front run Wall Street. And I even think about that through the lens of what we're doing at Castle. We have businesses, like small and medium businesses, all kinds of sectors. We've got gyms, accounting firms, coffee shops, restaurants, software startups on the platform who are putting a percentage of their revenues into Bitcoin, who are automatically putting some of their profits into Bitcoin. And I love that at least they're getting in first. So then when these enormous megacorps get in, they are, it positively impacts the holdings of all of the smaller businesses.
The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from CoinVigilante represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are representing sound money to the outside world. Make sure to check out those amazing CoinVigilante timepieces down in the descriptions. I love those watches so much. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need.
That got there.
It's a good thing. Yeah. Like the fact that people can still front run so many institutions is a very good thing. And it slowly gets to the point where the window of front running all those big players is kind of slowly closing, in my opinion. Like, it has been open now for 16 years, and now we have bigger companies already in there. Say Tesla, say like BlackRock and bigger institutions. But it's a very small percentage of the bigger players. And also those bigger players are not really into it. They're just dabbling in there. So this is a huge opportunity where it's still the most, and I'm curious on how you think about that, but I feel like Bitcoin in 2025 has the lowest risk, has the biggest risk to reward ratio, lowest risk to reward ratio, because it has the massive opportunity of capturing the world money of, like, I think Cypher puts that like $400-500 trillion market. But the risks are so small because so many questions are already cleared up. We have the regulatory questions in America that are cleared up. We have the internal war questions with the block size war that we just mentioned in the beginning. There's so many open questions that we had when Bitcoin launched in 2009, 2010 that weren't answered and now are already proven. So the risk is like very down and the reward is still like 99% of the total addressable market, talking about stock talk, is still uncaptured. So I'm curious how you think about that, but I feel 2025 is the lowest risk reward ratio ever.
Yeah, not enough people think about that. I agree. Bitcoin has been de-risked incredibly since its inception. And one thing that is so true and interesting for me to reflect on is, I've been buying Bitcoin all the way up and I still buy it today. It's my default savings technology. So anytime that I make any money from doing anything, startup investment, consulting, building salary, whatever, goes into Bitcoin by default until I decide what to invest in. So Bitcoin, I just treat as my default money and my default savings technology. But, so I bought Bitcoin at $100,000, $10,000. I started buying Bitcoin in 2013. I bought Bitcoin at $180 and it has never felt cheaper than right now. Because even though the dollar price was cheaper back then, certainly $180 is a lot cheaper than $120,000, but it had so many unknowns. There was like the government completely banning it was absolutely kind of fair game back then. And, there weren't any ETFs for it. There was zero institutional validation. There weren't even books written about it back then. The Bitcoin standard didn't exist. So it was just littered with unknowns. And even though the dollar price was cheap, you had all of this uncertainty. And although the dollar price has increased a lot, when you look at its market cap of about $2 trillion and the potential upside that it can get to, like you mentioned, safety, characterizes it in the hundreds of trillions of dollars. And I'd certainly agree. I think it's at least a $100 trillion asset potentially, probably at least a $200 trillion asset. And so $2 trillion to $200 trillion, 100x from its current value. Easy. And so just in terms of, the de-risking those big unknowns in the earliest stages of its life and the risk reward of where we're at today, it's never felt cheaper to me.
That's a massive statement from someone buying it early on. And I do think the same thing because it felt more expensive. I think the first time I bought it was like around 10K, something like that. And back then I was, it's so funny because I literally got a call today from a buddy of my dad today. I was like, oh yeah, I heard about the Bitcoin thing. I want to get in there, but it's so high. And people really have that feeling that it's high. And I think a lot of it is just the number 100,000. It just really feels high. I think we wouldn't have that conversation if Bitcoin would be at $5.
Yeah.
Same market cap.
Yep, you're so right. Not enough people think about it in terms of market cap. They think about it in terms of the price per Bitcoin. And it's impossible to know really what that means because it's not tethered to anything that we can understand. So in order to understand where we're at in terms of its potential, you need to think about market cap. And $2 trillion is roughly where we are today. There are still single corporations in the US that are worth more than $2 trillion. Apple Inc. is worth more than $2 trillion. So the idea that Bitcoin is anywhere near its potential, the world's global monetary base potentially in the future, is still worth less than a single company in the US. We're going to look back on that and laugh about how quaint that was and how early we were. So it always feels late, right? Like one thing that I remember feeling certain of when I started buying Bitcoin at $200 a coin was that I was late and I had missed the boat. I was sure of those two things because all of the people who I was learning about it from, who knew more about it than me, they were buying when it was $30 a coin, or they were buying when it was $5 a coin. And so you just, you only know the history up until the moment you're looking at the chart, and you always just look back and it was cheaper in the past than it is when you're starting out. But what is less obvious is that maybe when Bitcoin continues to grow, you're going to look back in 5 or 10 years from now and realize, wow, $120,000 Bitcoin was actually an incredible bargain. It seemed expensive because that was your first encounter with it.
That's a very good place to put it. Overall, I'm very curious how you think about Bitcoin treasury companies and the whole movement of companies now buying Bitcoin. We are very early. There are around like 150 publicly traded companies that now have Bitcoin, something like that. It's counting every day. How do you look at the adoption and the next evolution of Bitcoin, where retail seems to be less excited, but more and more bigger buyers and company buyers are now coming to Bitcoin?
Yeah, there's kind of a distinction that I would make when it comes to talking about Bitcoin for companies and Bitcoin treasuries. And that's between the Wall Street, the leveraged Bitcoin equity strategies, which are typically larger companies, often publicly traded companies, and they have access to robust capital markets and corporate debt. And they're, maybe they're part of this speculative attack that is being now performed increasingly on the dollar using Bitcoin. I think that's a healthy movement, but it's certainly a different risk profile than the other type of Bitcoin treasury strategy, which I don't think gets as much attention yet. And that's what we're really focused on at Castle, is companies that have cash flow. They're cash flow positive. They have some profits, and they want to carve out some of those profits and put them into Bitcoin and use that as their long-term savings tech. And so that doesn't necessarily involve any leverage. It's a much more conservative approach, but we see that as a way to gradually upgrade to better money in a way that is lower risk, lower complexity, and allows you to potentially, outpace alternatives that these companies have had, like high yield savings accounts and money market funds and things like that. Because in those accounts, those rates can change on you as the Federal Reserve changes rates. Then you're subject to a lot of variability there. And you just don't have the same type of supply side guarantees. There's no other asset that you can buy where you know that your global percentage of ownership will never ever be diluted, no matter what. And so we encourage SMBs that are cash flow positive to start with modest allocations of their profits into Bitcoin. And we enable that in ways that are seamless for them so that they can focus on their core business and just use our software to manage their Bitcoin treasury and allow our software to manage their Bitcoin treasury for them and know that it will stay within the parameters that they want.
That's a good point. It's so interesting for me because there's a lot of talk about cycles changing, and the talk, you've been in Bitcoin since $200, like we have every cycle to talk about a cycle changing. And I guess to the credit of the people that claim that, I think every cycle has been changing a little bit. Just not that we have like 3 years up and 1 year down. This hasn't changed so far. We're in an up year, and it's supposed to be up year. Let's see what 2026 brings. But it changed always a little bit as we moved up the ladder of who buys Bitcoin. And we know the supply of Bitcoin, like the supply is fixed. It's determined. It's calculated. Like you can look it up what the supply of Bitcoin will be. But then you come to the point of the buyers of Bitcoin are changing. And when we look at who bought Bitcoin in 2012, it's a very different group to who bought Bitcoin in 2017. It's now a very different group to who bought Bitcoin in 2095. You see that at Bitcoin conferences. You see that everywhere. What Bitcoin companies and services also offered. Probably a business like Castle wouldn't be maybe around in 2012 even, because there were not that many companies that even thought about Bitcoin. So in that sense, cycles are changing. I'm hesitating to even say that, but it's really interesting to see the progression of this teenager asset growing up and getting to the adult tables slowly, and what kind of hurdles and challenges come with that.
Yeah, you're right. It's a very different profile of buyer now, and I think that will only continue. We have pensions and endowments and we're going to have more of the Fortune 500 that are allocating to this asset. And the way in which they do that is very different than retail individuals or hedge funds or traders. And when you have companies like Strategy and Michael Saylor that are locking down as many Bitcoin as possible and engineering their entire capital stack to ensure that they can hold those on a 10 plus year time frame or a forever type of time frame, then I think necessarily the price action changes as a result. And so perhaps the days of very large drawdowns during bull markets are behind us to an extent. There will always be drawdowns, right? Like there will always be leverage involved and monetization of volatility along the way. But there used to be 60% drawdowns and, maybe 30% and 20% become more like it kind of becomes softened and dampened along the way because there is this nation state or sovereign wealth fund scale bidder who's always kind of waiting to scoop more up and increase their position. So that's exciting to think about. I think it's an inevitable part of the progression, and it's ultimately healthy.
Yeah, I noticed that we aren't ripping up that much, but we are also, the dips are like very short. Like we're dipping and it seems like people are buying it up and we're going back up. It's like, it's very uninteresting. Like it's very boring. Bitcoin became very boring in 2025 in my sense, very stable even.
Yeah. And it's neat to see more consistent types of buys happen. Like you've got like dollar cost averaging for retail individuals became popular from kind of 2019 onwards with like Swan pioneering that and River as well. And so that more consistent buy pressure where, now you have Michael Saylor who like announces his buy, he puts his orange dot on their chart every Sunday and announces their weekly buy on Monday. And at Castle, we allow something similar for SMBs. So, we allow, automated percentage of revenue buys is kind of our flagship feature. So if a company wants to put, say 2% of their profits every week or every month into Bitcoin, then we make that possible for them. And that type of just consistent recurring buy pressure happening across all of these different segments and profiles of buyers is really healthy, right? That just means there's more up and to the right, consistently on this chart. And back in 2010, it was really fringe for any person in the world to be buying Bitcoin. And now it's totally normal to meet someone who like buys Bitcoin or holds it or has bought. And today, I think we're in this place where it's still really fringe for a business to have bought Bitcoin. And maybe there's 10,000 businesses based on estimates that I'm familiar with, within the US that hold Bitcoin. That's probably generous. It's probably fewer than 10,000. And there's 34 million small and medium businesses in the US. So we're incredibly early in this. The vast majority of businesses have zero Bitcoin on their balance sheet. And in 10 years, all of them will have some Bitcoin on their balance sheet. And we're excited to be a part of that movement.
It's a good thing to do, I think, because I think it's a no-brainer for businesses to have allocation to Bitcoin. And there's 99.99% of businesses don't have Bitcoin, and all of them will have a percentage in Bitcoin. One last thing I want to get into before we get to the end routine is how you kind of imagine the next phase. We kind of already talked about it a little bit, where now there's more companies buying, there's more different institutional buyers, but how do you imagine this next phase of Bitcoin looking like?
I think it'll just be more ubiquitous. You will no longer have to go out of your way to encounter Bitcoin. Bitcoin will be in the places that you are and in the systems that you use and the companies that you use. And so your brokerage will offer it either directly or through their ETF, through your retirement account. You'll be able to interface with it. You'll be able to, it'll be recognized as an asset for credit and for underwriting. Like if you want to get a mortgage and you're all in on Bitcoin, that has been impossible for all of Bitcoin's life. The banks would look at you and they would say, okay, I see you have cash in your checking account and you have bonds and stocks and some real estate. Oh, but that Bitcoin stuff, that doesn't exist. And that kind of thing, that kind of mentality is going to change. Now they certainly won't treat it the same as cash. There might be a discount applied for volatility, but they'll no longer just stick their head in the sand and say Bitcoin doesn't exist to us. So validation, recognition from all different types of institutions, so that you don't have to do a lot of gymnastics as a Bitcoin holder to go through your day to day or to do common things like purchase a home. And then one thing that I think will just be an important inflection point in getting to this next chapter, this sounds small, but I think it'll actually be a big deal, is a mainstream huge company that's kind of a boring household name that buys Bitcoin. Because so far, the companies that are really going hard at Bitcoin are either they're like, there's Block, formerly Square, but everybody knows Jack Dorsey's like a hardcore Bitcoin maximalist, right? And so I think some other corporate leadership teams probably write this off as, oh, Jack's doing his weird Bitcoin thing. And then you have companies that have not had great core businesses. Maybe they're zombie companies, or maybe the core business is just stagnant. And they kind of looked at Bitcoin as a Hail Mary to revive the business. And so it's very easy today as a CFO to look around and find excuses as to why all these companies who have made a lot of money on Bitcoin kind of did so, and it would not be appropriate for them to do so, because they might say to themselves, well, our core business is great, so it would not have made sense for us to do this risky Bitcoin stuff. But once a household name, like once a Costco or, an Oracle or like Walmart, like name your stock, something that just has brand recognition at the household level, and Bitcoin has nothing to do with their core business. No one in the leadership team maybe like wraps their identity up in Bitcoin. Once CFOs see that happen, I think that will be an important inflection point in this, of validation that this is applicable to all of the Fortune 500.
I always think about Apple. Like it's such a cash-rich business, and it's just a name that like it's just such a huge thing that everyone is familiar with. This would probably be a huge event. Like if Apple says anything related to Bitcoin in a very, like, not just on the side. I mean, we know Tim Cook said about like he owns Bitcoin and he finds it interesting and all those things. But this doesn't do anything because like this is a very, I'm for technology kind of a thing that a technology CEO can say. But it's an interesting perspective of saying like, a non-technology household name like Costco or like a Walmart saying like, hey, we want Bitcoin just because it's a great asset to hold. Not because we are a technology company, because we're like anything, not because we want to do like a hot wallet on our phones with Apple. Like that would be crazy. Like I would love that. But I also would be very careful with trusting it, but maybe as a hot payment wallet, that could be really cool. But if that's an interesting perspective of like a household name that has nothing to do with like technology or like in any way, shape or form with Bitcoin, just says like, oh yeah, we thought about it and we want to do Bitcoin. Like it just makes sense of a financial, like that could be, I never thought about that, but that could be huge.
Yeah, I think that'll be a big deal. Just seeing it as the right tool for the job from a fiduciary perspective, protecting shareholder value.
We have one question that I asked each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
Besides Bitcoin? That's a fun one. It's almost like what is some lore about yourself? I saw that circulating on X recently. That was a fun meme. I really like thinking about health and longevity too. And I know that health influencers and fitness influencers on X is kind of this like exhausting meme space that's taken on a life of its own. But I think a balanced approach to all of that, Bitcoin actually opened my eyes a little bit more to. And once you think more about the future and you have a lower time preference, you're more optimistic and you want to be around to experience that better future. And so that, seeing people like Brian Johnson, who's doing his hardcore longevity thing, and he's kind of at one end of the spectrum. And then you've got all of the like raw, organic Paul Saladino, Bitcoin carnivore guy, at the other end of the spectrum, figuring out sustainable, balanced in-betweens of that, of like how to live life and have meaningful interactions with people and not get neurotic about your health and not let it be a hindrance. But at the same time, be fit, be healthy, be around to like for your loved ones and have great quality of life. I just spend a lot of time thinking about that. And so in terms of, translating that to daily routines and best practices, whether it's supplementation, exercise, sauna, detox, that kind of stuff, and how to make those types of things practical for a variety of different circumstances. I love that kind of territory. So if anybody ever likes to nerd out on that kind of stuff, I should probably start posting a little bit more about that. I used to more than I do today, but I'm an enjoyer of all that kind of stuff and think it's really important. So any enthusiasts, always hit me up.
That's amazing. Yeah, I could also. That's an amazing thing. I saw Brian Johnson actually at a Bitcoin conference. I think that the one in Las Vegas, he was there. It was also fun seeing him at a Bitcoin conference, because it's just like I watched him and his Netflix documentary, and it's fascinating what he does. And then it's like, oh, he's in on a Bitcoin conference. That's that was a weird worlds colliding.
Crazy mashup.
Exactly.
Yeah, we've got to get. So I think at one point he was like dabbling in Solana for an NFT or something. And Brian Johnson, you need to realize that Bitcoin won't die. Bitcoin is don't die technology, and you might be being distracted even from people you love who are otherwise wonderful in your social circle by these cryptocurrencies that are going to die. So please focus on Bitcoin.
Bitcoin might outlive Brian Johnson.
Yeah, I think so. Yeah. Yes. Yep. That'll be hard to compete with the longevity of Bitcoin.
But yeah, really cool. Thank you so much. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question. It's a very simple one, I think, for you. Do you think Bitcoin treasury companies are here for the long run? And he, I think, specifically means Bitcoin treasury companies that kind of play that fiat game on top of just like buying Bitcoin, but like actually like using the credit and using all this bonds things with Bitcoin.
Yeah, this response might get me a little bit of hate. Like, I feel like right now there's a lot of skepticism and sentiment against some of these fiat tactics being applied to acquire Bitcoin. And don't get me wrong, I do think there will be some blowups. I do think some companies will get out over their skis on this, and so buyer beware. But overall, I actually think the trend is healthy and positive and good. And I think that they're going to be around and thrive the majority long term. I think it's like if companies realized early on that gold was going to be valuable back when like nobody really thought about it. And it's as if you could just back up the dump truck and obtain a dump truck full of gold for pennies, in terms of the ability to exchange dollars for Bitcoin at the current market price. So yeah, volatility and roller coaster, absolutely. But I think that they'll be well positioned, and maybe some of them will turn into enormous sort of function as like banks or become the household name, like the JP Morgan and Wells Fargo's of the future could be some of these institutions that are early to scoop up Bitcoin in big ways.
I also think so. Like a strategy has the possibility to be bigger than JP Morgan and Wells Fargo and all those players, and be a facilitator for finance for retail, but also for big companies. Like having so many Bitcoin and having the brand recognition and right now already 5 years with a very clear story and very clear commitment. That's amazing. Like I think they're in a great shape to do things like that. I have no clue if they actually will do things like that, but if you think about what they can do and strategy and offering all those services, and it's almost a natural evolution to be a player like that, like almost like a global bank for different services in a Bitcoin world. I think, and banks should exist in Bitcoin. Like I think banks got a bad name because of central banks, but like the job of making sure finances are done right, like that's not bad. Like people need help with those things, and yeah, I'm all for that.
Same. Yeah. Banking done well, like you said, is a big value add, and it's integral to our society. So eager to see more banking done right on sound money in the future.
Awesome. Thank you so much, Stephen, for being on the podcast. Before I let you go, where can people find you and ask you questions?
Yeah, thanks so much for having me, Robin. It's been a blast. I'm on Twitter. My personal account is sthenc, STHENC, and Castle. So we're savewithcastle.com, and savewithcastle is our handle on X and all social media. And if there are any business owners out there in the US interested in allocating to Bitcoin, hit me up. We'd love to chat.
I think there will be a lot of them coming up in the next 5 to 10 years.
Think so too.
Yeah, thank you so much, Stephen, for being on the show. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Ciao, ciao. Bye-bye.
Thanks, Robin.
This content is for educational and entertainment purposes only and does not constitute financial advice.